This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver, and I'm thrilled to have Frank Holmes back with us again. He is the CEO and CIO of U.S. Global Investors. Welcome, Frank. It's great to see you.
Good to be back in Vancouver.
Now, Frank, you just went 7 days around the world.
I did.
Can you tell us a bit about what you saw?
Well, I was in Europe and then I went over to Singapore and spoke at a mining summit in Singapore. And what I learned was it was approximately $1 trillion was spent in mining in the past 14 years. 300 billion was in iron ore in Australia.
Interesting.
Basically, it was the biggest recipient in Brazil. And 300 billion went into coal. So we have 20 years of supply of iron ore and coal. So coal is basically persona non grata with carbon implications, but at the same time there's lots of supply. But only 150 billion was spent on gold and 150 billion on copper, and then other metals was a lot less. So there's supply disruption, the opportunity for commodities rising, those stocks rising, are much more with gold, silver, and zinc, for a simple example, has been on a bit of a tear in the past 12 months.
Yeah, zinc has. So what did you observe in Singapore?
There were more people than a year ago, and private equity was there looking for opportunities and deals. There are many presentations, and there's been funding by these super sovereign funds, putting up $1 billion through groups of mining engineers and geologists. So that to me was interesting, and Franco-Nevada spoke, and they have an Australian office, and their particular executive was up basically talking about the greatness of their model.
Right.
And it's a source of capital for mining companies.
I know you're a big believer in them. I think you call them the three Amigos.
I do.
Franco-Nevada, Silver Wheaton.
And Royal Gold in
Royal
Denver.
Gold. Okay.
And they're just beautiful companies. Mm-hmm. Just think, Franco, $500 million in revenue and less than 30 employees.
Wow.
Same thing with Silver Wheaton, huge free cash flow, the greatest in the world. Look at New York Stock Exchange, the highest revenue cash flow per employee, bigger than Goldman Sachs. So that's a nice business with 50% margins.
Now, last time you were on, Frank, we were talking about global PMIs, synchronized global growth, and the potential for that in terms of the resource industry. What are you seeing in terms of the Chinese PMIs?
Well, they're the panda bear. I just put my presentation to show that they're negative, and the global PMIs have pulled down also.
Right.
And so that creates a real challenge. But bad news is good news.
Okay.
Because the governments all turn around and jump and start stimulating their economy.
Right.
And last fall, we saw Chinese governments start a stimulus program, dropping interest rates, doing everything, and they've been doing each, seems every month, doing something to stimulate economic activity, and their stock market's up 120%.
Right.
So, and still the dividends on the Shanghai exchange are greater than the S&P 500.
So the PMIs are down, but on the upside, the governments are taking swift action?
Immediately. It happens that every time the Chinese PMI comes out and it's negative, the next day they have an announcement. So why is PMI important for your readers and listeners? It's because PMI is the Purchasing Manufacturers Index and is forward-looking. GDP is looking out the rearview mirror. It's already happened. So how do you sort of forecast going out 6 months, and every month it updates itself? So it's a beautiful tool to get the trend as your friend. So what we look at is when the 1 month is above the 3 months, then all of a sudden you start seeing better confidence in commodity demand.
Now, what do you see when you're looking specifically at China? For years and years, they were putting all of this spending into building up their infrastructure. And now they're focusing more on transitioning their economy into sort of a self-sustaining, consumer-based economy. So what are you observing there?
So what they're doing is that they're creating a new bank, basically their own world bank.
Right, the China Infrastructure Bank?
China Infrastructure Bank. And originally there was lots of criticism with regard to it out of the US, but it is a plan to finance, and they're also exporting their intellectual capital. They're the most advanced at building railway systems. And they're looking at building a railway system from Brazil to the Pacific coast.
Oh, wow.
They are building from Beijing to Moscow. They're spending $40 billion for financing in Pakistan. They're building ports. So they basically got that turnkey operation at a third of the cost of North American and European engineering shops. But you should see them lay rail. I mean, it looks like a huge insect, the way it drops the rail, bolts it together, drops the rail, and it's the fastest process of infrastructure build-out. So I think that the fact that they're trying to outsource that, and this will be important for economic development down the road.
So it'll be a stimulant for certain countries that they
stimulant and for commodities.
Right.
It will be a stimulant, but nothing like what we had before for the huge steel consumption.
Now, with the growing, number of Chinese, needing jobs, and this 300 million that are going to be moving into the urban areas, do you think that they're going to be successful in transitioning to having their own domestic consumption?
They're showing it. And I remember going for the board a couple years back in Beijing, and the luxury goods were very expensive.
Right.
So I could go buy the same Prada bag in Hong Kong for 30% less. The tax was so high. Now, 2 weeks ago, they equalized it. So they're trying to stimulate that economic luxury goods now to stay in China rather than have to go abroad to do it. So I think that they're positive parts. But some of the other really interesting parts is travel.
Right.
The Chinese found to go into Europe, you had to go through one of the embassies of Europe. And the fastest embassy was Spain.
Okay.
By 3 days versus maybe 3 months with France. So what happened is that luxury goods sales jumped by 25% in Spain and were minus 4% in France. The British immediately created a visa process to fast-track Chinese that wanted tourists to go to Europe. And now the Americas come with a 10-year tourist visa.
Oh, wow.
So why is that? Because you have 100 million people making $100,000 a year. They got lost in a sea of 1.4 billion, and they're all traveling. And they're coming over, and you've seen the Grand Canyon signs are not just in English and Spanish, they're Chinese now.
Wow.
So there's a new change taking place.
Right. Now, what do you think about the viability of the renminbi, as a global reserve currency?
That's a fabulous question. I think it's positioning to become a key player up against this pound, the British pound, the euro, the dollar, and the Japanese yen. And gold. And that's another reason why they're funding the $16 billion basic fund for gold exploration or gold development through the Silk Road through Asia. Because for bankers to be able to buy gold at a lesser price, they believe, in these countries. So I think that they realize that they have to have gold to support their currency to be global trade. So they have been consuming a lot of gold.
Could it take over the petrodollar?
I don't want to take it over, but I think it becomes more competitive.
Okay.
And it's only intelligent for them because they're the biggest buyers of commodities. They're always priced in dollars. So all of a sudden now they'll be priced also in renminbi. And that gives more credibility and trading power.
Do you think the government's going to have to keep stimulating the economy, or will growth, resume at kind of higher numbers?
No, I think that it's a slow process of repositioning from massive foreign direct investment for these mega infrastructure build-outs to consumer spending. But what they did do is they deregulated a lot of the processes, so the technology stocks have been on a tear.
Okay.
It's a huge wins in China, and same thing with financial institutions, etc. That's why that stock market's up 120%.
Right.
Now, it's going to be volatile. Last week, 6% drop in one day.
Now, let's talk about gold a little bit, and we always talk about, the love trade. I guess that goes from the summer Ramadan until Chinese New Year. So did that kind of end in February? What are we seeing right now?
Well, we're just coming to the trough. This is the best time for this conference. Usually these stocks are the cheapest of the year as at this time period.
Right.
And they highly correlate with the price of gold or other commodities, and usually the second half is stronger for a lot of commodity demand. So I think that it bodes well. Europe, as confidence has picked up on the sentiment factors, interest rates are negative there. Gold in euro terms has been on a tear, so Europeans have been buying gold. Japan, yen, and gold terms have been strong. So I think that gold has a better footing to it. I think in a lot of the base metals like zinc, there's opportunities there. That's what I look at. And the other part is just basic travel. And I think that's tourism is going to be a key part of what China does. And what's interesting is that the Chinese, as you know, in Vancouver, but they love North America.
Right.
and they love America. So I think it's going to only be a much bigger transition coming over.
Absolutely. Now, what are you doing with your money right now? What are you advising people? I think you just launched a new product.
We launched our first ETF.
Okay.
We've been so slow at, thank you, and it's been slow doing it. But what I love, it's called Smart Beta, and we use factors to screen stocks. And it's called JETS. It's listed on the New York Stock Exchange. And what that means is that you can buy. Canadians can buy, Europeans, Chinese can buy, but only Americans can buy our mutual funds. But the world can buy this product, JETS. And the JETS, as a transport vehicle that's publicly traded, that category is in the transport sector. They look for trucks, trains, and planes.
Okay.
Now, trucks and trains trade at 19 times earnings, and planes trade at 9. They're so inexpensive. I'm a GARP investor, so I like this. When I've been flying up here, quite often flying Alaska Air, and that's where I found it. I bought the stock and it had doubled, so I said, what can I do? And then I noticed this global travel phenomena, and the other part is that CEOs are much smarter stewards of capital, and they've been increasing their dividend. They've been buying back their stock. Delta just announced a 50% increase in their dividend, $6 billion stock buyback. The CEO of American Airlines said, pay me all my comp in stock. So there is a transition. It's cheaper than the other forms of transportation. It's half of what the S&P trades at. There's dividend growth. So it's an exciting asset class, and it's gone from $0 to $40 million approximately in the past 20 days. It now has options on it. So if you don't like airplanes, you can go short. If you like them, you go long.
Right.
It's very different than a mutual fund. And I think with this global travel of China, with tourism, et cetera, with the US, it's a beautiful positioning.
Great. Well, thank you so much for stopping by, Frank, and for the update.
It's great being with you.